I trust this video finds you all well and that you're doing all right in the course so far, only a couple lessons in. This lesson's about the balance sheet. Probably a statement that a lot of people overlook in favor of going directly to the income statement. But if you happen to look at audited financial statements, you will notice that the balance sheet is always the very first statement in the set of financial statements. I have no idea as to why that is, but it's there, and it is an extremely important statement for an organization. But it really depends on the size of your organization. If you're a very small organization, and you got a very small budget, you may never ever see a balance sheet. It may have no impact on you. But if you're a very large organization or a very large ministry unit, the balance sheet could be a critical financial statement for you to look at. There's a wealth of information in the balance sheet that can help you to assess how well you're doing, how well the organization's doing, how well it might do in the future. I have a cat. This is one of my cats. This is Arthur. Likes to be on your lap. But the balance sheet is the end result of everything that happens on the income statement. Everything eventually arrives there. Your cash is there, your receivables there, your accounts payables there, your net profit ends up on the balance sheet. And what that all means is that you can look at the balance sheet and tell you how well you're doing from a liquidity standpoint. It's a statement you can look at that can probably tell you your capability to continue to operate in the future, or how much money you have to pay your bills or to pay your payroll. It's just one of those statements that is, like I say, it's often overlooked and often misunderstood. And a lot of people, when they look at it, they look at their cash balance only, and the cash balance is only a partial part of the story when you're looking at the liquidity of an organization, where the organization's headed. And in a for-profit organization, say a retail operation, a warehouse operation, you would have inventory, lots of inventory, and maybe work in progress if you're designing something. It's also where your land and buildings would be, fixed assets. So if you have vehicles, your vehicles are there. And we'll talk about that. I mean, when you buy an asset is depreciated. So you buy something for $10,000 and you're going to write it off over 5 years. If you do it on a straight line basis, every year $2,000 of expense goes to your income statement, and your asset is reduced by $2,000. It'll say where your liabilities are. How much do you owe your vendors? And quite often you'll look at a balance sheet and you'll see that you owe more than you have in the bank. So you begin to question, do I have enough to operate? But then you see you have receivables that maybe you need to collect. So it's a statement that means a lot, especially if you as you grow in your career and you get into higher positions and bigger organizations. So I would make sure to take some time to read through this lesson, understand this lesson, and really get a handle on what the balance sheet is telling you about your organization. So good luck with the lesson. Again, any questions, make sure that you reach out to me and at any time by email, and take advantage of the Friday morning sessions if you want to have a video chat. Good luck with the lesson. Thanks.